Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Why is the retail sales data so important? It's because the US economy is a heavily consumption based economy and a slowdown in consumption is often reflected in the fall in retail sales number. US released both retail sales and the industrial production data, which JK will cover in detail. But there is one more thing that has grabbed my interest, which is Nvidia. Now, Nvidia has crossed Apple and Microsoft to be the most valuable company on earth. Morning, JK. Apart from the data, what's your thought on the recent exuberance in the stock markets, especially what's going on in the US?
Hey, good morning. Stock market have continued with their momentum. Yes, the US monetary policy, where market expectation of two rate cuts have actually risen after yesterday's retail sales data that came worse than forecast. There was a slight increase of just 0.1% and well below the forecast of 0.3%. And worse was that the core retail sales, that is ex-autos, was down 0.1%. That's negative versus increase of 0.2% forecast. As you said, consumption is, actually 65% of the US GDP. And that actually is leading people to conclude that, US economy is definitely on the way of a slowdown, despite the fact that industrial production yesterday rose by 0.9% versus a flat growth in April. Again, comparatively, the manufacturing constitutes only 10% of the US GDP. So you can realize why the market was softer on the yields, and also the risk sentiment was supported, and dollar was also relatively softer. Not a big move, but definitely not away from its best level sale in the last few days. Also, on the stock market, as you were hinting at, the AI has been leading the stock market rally recently, and it's not surprising that Nvidia has been able to overtake the big giants in terms of market capitalization. The similar sentiment is seen mostly across the globe. Japan is continuing to rally with the weak yen, and India, of course, expectation of continuation of reforms by the new government is leading the index to new all-time highs almost every day now. So overall, this sentiment is good. Monetary policies are slowly tending towards cuts. Europe may cut 2 more times. So these are some factors that are supporting the risk sentiment. Also, on the positive side, the right-wing faction in France, the leader, Ms. Le Pen, said that she would be ready to work with President Macron and would not seek him out. So that was some relief for the markets in Europe. That's why you saw the yields in France and Germany come off, and stock markets stabilize. Even the euro has more than 0.5% up from its worst levels that was seen last week. So, however, we will wait till the elections outcome, which will be in two phases on 30th June and 7th July. Political alignment is not is definitely changed, but it may not be as worse as people started imagining. Something like Brexit, or France would leave Europe in due course, and all that was overblown. So that is getting moderated now. Also, the German Jew data released yesterday showed the 11th straight month of improvement. So while the economics in Europe has taken a backseat out of the political developments, they should not be ignored that Europe is steadily on the improving side, definitely. We have a holiday in US today due to Juneteenth day, and that keeps the markets quiet overall. And in particular, also in the rupee, there will be very little cash. I mean, no cash transactions will be there. There are actually outflows will not be there. That means that rupee can maintain the recently acquired strength, falling from the all-time low of 83.57 to 83.40 yesterday, and could extend because there have been some good bond-related flows. In fact, if you look at the FII flow numbers of this month, there has been marked, inflow of nearly 700 million in bonds, whereas for equities it is from negative it has turned to positives. Overall, we have about 1 billion of inflows, and this was deeply in the negative earlier in the month, more than 2 billion. So that actually the flow pattern improving has also helped the rupee to great extent coming off from its worst levels. And of course, yesterday even the nationalized banks were not so much on the buying side. Although oil moving to April highs is somewhat of a concern, which is coming on the back of trade deficit rising as well. But overall, not much deviation is seen from the established range of 83.30 and 83.55. Thank you.
Thank you, JK. And just quickly summarizing, the market expectations of two rate cuts this year has been improving after a poor retail sales data. Consumption is slowing down with the core retail sales showing even a degrowth on a month-on-month basis. AI pack has been leading the stock market, and a rate cut cycle seems to be bolstering the sentiment as well. Germany is seeing some improvement as shown by the ZEW sentiment, which has improved for 11 straight months. So that's something very interesting which is happening despite the political turmoil which is going on in Europe. And rupee fell from its all-time lows of 83.57 to 83.41 recently, and today's dollar holiday should allow it to hold on to its gains. That's it from us today. Thank you so much for listening. Tune in tomorrow for the latest in the financial markets.